Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello. This is Roshonda, agency owner of the Isom Insurance Group here in the Sunshine State of Florida, back again with another Quick Bite episode, your fast and informative insurance market update. Today is Saturday, August the 8th, 2026. And today we are talking about solar panels. More specifically, we are talking about what can happen when Florida homeowners install solar panels, finance solar panels, purchase a home that already has solar panels, and then discover that the insurance company has questions. And when I say questions, I do not mean one friendly little question such as, are the panels blue or black? I mean questions about permits, roof age, ownership, financing, liens, installation documents, replacement costs, electrical capacity, liability coverage, and who is responsible for removing those solar panels when the roof needs to be replaced. Solar energy can lower electricity costs and may be a good investment for some homeowners. However, solar panels also introduce new property, financial, title, structural, and insurance considerations. A homeowner may think, I'm simply putting panels on my roof. The insurance company may see a roof attachment, additional property value, electrical equipment, possible hurricane exposure, and a financing agreements and a potential extra expense every time roof work is needed. That is why solar panels and Florida home insurance sometimes mix about as smoothly as oil and water. So today I'm going to explain why solar financing and liens can delay an insurance approval, how solar panels are normally addressed under a homeowner's policy, what damage may or may not be covered, why the size of the system matters, and what you should verify before signing a solar contract or buying a home that already has panels. Let's get into it. Let's begin with the financing. Many homeowners do not pay cash for their solar systems. They may use a traditional loan, a solar financing agreement, a lease, a power purchase agreement, a UCC fixture filing, or a property assessed clean energy program, commonly called PACE. These arrangements are not all the same. That distinction matters because the insurance company, mortgage lender, title company, and future buyer may each treat them differently. Under Florida's current PACE framework, qualifying renewable energy improvements may be financed through a non ad valorem assessment attached to the property. The financing agreement is recorded in the county's public records, and the assessment is collected in connection with the property rather than being treated like an ordinary unsecured credit card balance. Florida law also requires disclosure explaining that this is not free government assistance and that the obligation must be repaid. In plain English, the solar salesperson may leave your driveway, but the financial obligation does not leave with them. A homeowner may hear $0 down and mentally translate that into free solar. $0 down does not mean $0 owed. It usually means the bill is awaiting for you somewhere else. And sometimes that somewhere else is in your property tax bill. PACE related assessments can create complications during a sale or refinance because the obligation is connected to the property and recorded in the public records. Florida law describes certain qualifying improvement assessments as liens with dignity comparable to county taxes and assessments. That can make mortgage companies and title professionals very cautious. An insurer is generally not making the mortgage decision, but the underwriting process may still become more complicated when ownership, permits, financing, or responsibility for the equipment is unclear. Some insurance carriers may question whether the system is owned, financed, or leased. They may question whether a UCC filing exists. They may want confirmation that the installation is complete and permitted. They may want the panels included in the homeowner's home's replacement cost calculation, and they may pause the application if the documents do not match. For example, imagine a customer tells the insurance agent the solar panels are completely paid off. Then the public record or closing documents show an active financing filing. Now the underwriter has two different stories. Insurance underwriters do not enjoy mysteries. They are not sitting at their desks hoping to become private investigators. They want consistent documents, clear ownership, and a straightforward answer about who owns the panels and who is financially responsible for them. Another common issue involves a UCC1 financing statement or fixture filing. A solar lender may file a security interest in the equipment. This does not automatically mean that the lender owns the entire home. However, it can establish the lender's legal interest in the solar equipment. Florida's Uniform Commercial Code recognizes that security interest can be created in fixtures, including goods attached to real property, and that properly filed fixture interest can affect priority rights involving the equipment. This becomes especially important when a homeowner sells the property. The buyer may say, I do not want to assume the solar loan. The seller may say, I thought the panels transferred automatically. The lender may say someone still owes us money. And the title company may say nobody is closing until we figure this out. Meanwhile, the insurance agent is on the phone explaining that coverage cannot be finalized because everyone is still trying to identify who actually owns the equipment. That is why homeowners should obtain financing agreement, payoff information, lien information, permit records, warranty documents, and equipment specifications before listing the home for sale or applying for a new insurance policy. Do not wait until 3 days before closing. 3 days before closing is when people start typing emails in all capital letters. And just to give a little bit more, I had someone call me for a homeowner's quote, and they were looking to buy a home with solar panels. And they were explaining to me how, because the buyer still owed for those solar panels, they had to put that into their purchase contract. Like the solar panels would be paid off. And the buyer was the seller was responsible for paying that off, and it was not going to be assumed by the buyer. So these solar panels financing are really affecting sales contracts and how those are structured now. So just be very, very cautious, especially if you're a buyer and you're buying a home with solar panels, that you address this. I would hate for you to buy that home and have to assume that debt and you did not know. Now, let's talk about the favorite topic when we're dealing with Florida homeowners insurance, the roof. The roof is on fire. In Florida home insurance, the roof is often the main character. We all know that. That is the main question every homeowners, whenever you're asking for a quote or we're looking at your policy, the roof is on fire. The plumbing may be important. The electrical system may be important. The water heater is definitely becoming an important factor, but the roof is always on fire and enters the room like it owns the place. Of course, the roof is on fire. When solar panels are mounted on a roof, brackets and fasteners are attached to the roof structure. A properly designed and properly installed system should comply with applicable structural, electrical, wind load, and permitting requirements. Florida's building standards require rooftop equipment and supports to be secured for structural loading, and permit documentation may include design calculations and product information. The problem arises when installation is incomplete, unpermitted, poorly documented, or performed incorrectly. An underwriter may want to know whether the installation was permitted by the local building department. They may request evidence that the system meets wind load requirements. They may want photographs, inspection documentation, or proof that the work was completed by a properly licensed contractor. They may also question about the age and condition of the roof beneath the panels. The roof age issue can become a major obstacle. Florida carriers have different underwriting rules, so there is no single statewide rule saying every roof older than a specific age is automatically rejected. However, many carriers place stricter limits on older roofs, with particularly the roof has limited remaining useful life. Now imagine installing a $30,000 solar system on a roof that may need replacement in 3 years. That is like installing brand new granite countertops in a kitchen while ignoring the fact that the floor is sinking. Eventually, somebody is going to have to move all that expensive equipment. This is a bone of contingency for me. Um, I don't know if these solar companies are inspecting these roofs before installing their equipment. I know before I would have customers that would call and say they were doing it, but I'm questioning whether that's happening. I did have a customer call me like 2 weeks ago, and where they installed these solar panels, it was starting to leak. And she believes that it was from the solar panels not being installed correctly. So now she's dealing with having to see. She's saying she wants all of the solar panels removed, but she was calling to see if insurance would cover. And insurance is not going to cover for installation of the solar panels incorrectly. Insurance covers for covered perils, meaning like if a hurricane came through and blew the solar panels off, potentially they could be covered if the solar panels are covered under the policy. But just for shady work or not being installed correctly, that is not covered by your homeowner's policy normally. So that is a big issue. So please make sure you know who's installing your solar panels, and make sure you get a roof inspection before they install those solar panels. When a roof beneath solar panels must be repaired or replaced, the panels may need to be disconnected, removed, stored, and later reinstalled. This is often referred to as removal and reinstallation, or R&R. That process can cost thousands of dollars depending on the size of the system, the contractor, the electrical work involved, and the complexity of the installation. And here is where homeowners can get surprised. A covered roof claim does not, does not automatically mean every solar panel expense will be paid without question. Coverage may depend on the cause of the loss, policy language, whether the panels are owned or leased, whether the panels themselves were damaged, and whether removal is necessary to complete covered repairs. For example, suppose hurricane winds damage the roof and the carrier agrees that the roof loss is covered. The solar panels may need to be removed so that the damaged roof can be replaced. The policy may address reasonable costs connected with covered repairs, but the exact treatment can differ by policy and carrier. Now, change the example. Suppose the roof is simply old and needs replacement due to wear and tear. Wear and tear is normally not a covered cause of loss under your policy. In that case, the homeowner may be responsible for the roof replacement and the solar removal and reinstallation costs. That can turn an already expensive roof replacement into an even more expensive project. Suddenly, the solar savings account and the roof replacement account are having a meeting, and neither one brought enough money. Permits are another major concern. A solar installation generally involves structural and electrical work. The local building department may require plans, inspections, and approval before the system can legally operate. The utility The utility company may also require an interconnection application before the system sends power back to the electrical grid. FPL, for example, tells customers to begin the net metering application before installation, obtain approval, complete the required documents, and wait for the appropriate meter before operating in parallel with the grid. When a solar system is unpermitted, the insurance company may pause the application or require proof that the installation has been brought into compliance. The homeowner may need to obtain permit records, engineering information, electrical diagrams, contractor documentation, or a final inspection. That can take time. It may also cost money. This is why I strongly recommend verifying the contractor's license and the permit process before installation begins. Do not let someone tell you permits are just paperwork. In insurance, real estate, construction, paperwork is often the difference between smooth sailing and six people pointing fingers at each other. Please, 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 if you are installing these solar panels, make sure they're pulling permits. Make sure you got a permit. Make sure they're finalizing. They're getting make sure they're getting the final sign off on those permits. Please make sure they're pulling permits. It can be a nightmare down the road. Now, finally, let's talk about insurance coverage. When solar panels are permanently attached to the roof and owned by the homeowner, they are commonly treated as part of the dwelling. That generally places them within Coverage A, which is the dwelling portion of the homeowner's policy. Coverage A protects the home itself and property permanently attached to it, subject to the terms, limits, deductibles, conditions, and exclusions in the policy. However, adding solar panels can increase the cost to rebuild the home. That means the insurance company needs to know they exist. Suppose a home originally has a replacement cost of $400,000. The homeowner installs a substantial solar system and related electrical equipment. If the insurer is never notified, the policy may still show the old replacement cost estimate. That creates a potential underinsurance issue. The homeowner should contact the insurance agent after installation and provide the contract, panel specifications, installation costs, permit information, and ownership details. The carrier can then determine whether the Coverage A limit needs to be increased. The goal is not simply to ensure the price the homeowner paid. The goal is to estimate the cost to replace the insured property after a covered total loss. Those numbers are not always identical. Please, 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 this is another PSA. If you install solar panels, before you install solar panels, please contact your agent. Some carriers do include them in Coverage A. Some carriers require that you get an additional endorsement to cover the solar panels. And some carriers don't cover them, period. No matter what, whether they, whatever, they don't cover them. So please, before you install solar panels, check with your insurance agent. I would hate for you to install solar panels and you think that they're going to be covered and they're not covered, or you got to get an additional endorsement, or they increase your Coverage A amount and now it's becoming unaffordable on your insurance policy. A ground-mounted solar array may be treated differently because it's not attached to the main dwelling. Depending on the policy and installation, it may fall under Coverage B, which covers other structures located on the resident's premises. Coverage B is often set at a percentage of Coverage A, commonly 2%, and then sometimes you can go higher, although limits and options vary. For example, if a home has $400,000 in Coverage A and 10% in Coverage B, the other structure limit may be $40,000. Now suppose the homeowner has a detached garage, a fence, a large shed, and a ground-mounted solar array. All of those items may be competing for the same Coverage B limit after a major loss. This is why a homeowner with expensive detached solar equipment should question whether the standard other structures limit is sufficient. The fact that something is covered does not always mean the limit is high enough. A coffee cup can hold water. That does not mean it can hold your swimming pool. And another note on this, Sometimes the coverage B limit, your other structures limit, is capped or maxed at 10%, and you may need to add an extra endorsement to get more coverage. So again, before you add these solar panels, check with your agent, make sure how it's covered, let them know what you're getting, the array ones or the ones attached to your roof, so that we can better advise you on what is best and how it's going to affect your insurance. Lease systems and power purchase agreements create another level of complexity. With a lease, the solar company may retain ownership of the panels while the homeowner pays for their use. Under a power purchase agreement, the homeowner may pay for the electricity produced by the system rather than owning the equipment outright. In those situations, the solar company's contract may state that the company is responsible for certain physical damage to the equipment. However, the homeowner still needs to review the homeowner's policy and the solar contract carefully. Who is responsible if the panels damage the roof? Who pays to remove and reinstall them? Who carries liability coverage? Who handles storm damage? What happens if the home is sold? What happens if the solar company goes out of business? What happens if the buyer does not qualify to assume the agreement? These are not questions to pose after the hurricane. They are questions to pose before signing. A standard Florida homeowners policy may cover sudden and accidental physical damage caused by covered perils, subject to the specific policy form. Potential covered causes may include wind, hail, fire, lightning, or falling objects. Hurricane damage is generally subject to the hurricane deductible. We've been over this before. Your policy always here in Florida has an all other perils deductible and a hurricane deductible. When the policy's hurricane provisions apply. For example, if hurricane winds tear panels from the roof and damage the roof covering, the claim may involve both the dwelling and the attached solar equipment. However, coverage is not automatic simply because damage exists. The adjuster may determine that the cause of loss, the policy provisions, the ownership of the equipment, and whether any exclusions apply. So they're going to investigate the claim. So they're going to go through again, anytime you have a claim, they have to go through and make sure the policy of like what caused the damage. Does the policy apply? What conditions? What may be exclusions? They're going to go through that whole process before determine what is paid and what is not paid. Improper installation is a major area of concern. If water enters because the installer failed to seal the roof, penetrates correctly, failed to seal the roof, penetrates correctly, the policy may exclude defective workmanship itself. There can sometimes be a distinction between the faulty work and resulting damage depending on the policy language. That is why claims involving installation defects can become complicated. The homeowner may need to pursue the solar contractor's workmanship warranty or liability insurance. Wear and tear is another common exclusion. Solar panels, wiring, inventors, roof materials, seals, and electrical components do not last forever. Gradual deterioration, corrosion, mechanical breakdown, manufacturing defects, and normal aging are generally different from sudden accidental storm damage. A homeowner's policy is not a maintenance agreement. It is also not an extended manufacturer's warranty. If an inventor stops working because it's reached the end of its useful life, that is not the same as lightning damaging the inventor during a storm. And that's where it gets really complicated. If it's shady work or just regular wear and tear, you need to make sure and read those contracts who is responsible at that point. Because if any of those things happen, a lot of times your homeowner's policy is not going to cover that. Your homeowner's policy only covers the covered perils that are outlined in the policy. And normally wear and tear, as well as shady workmanship, is not covered. Now let's talk about the system capacity. Florida utility interconnection rules divide customer-owned renewable systems into tiers. For FPL's current net metering program, Tier 1 systems are up to 10 kilowatts, Tier 2 systems are above 10 kilowatts and up to 100 kilowatts, and Tier 3 systems extend above 100 kilowatts to 2 megawatts. Tier 2 and Tier 3 customers must provide proof of liability insurance. FPL states that Tier 2 customers must carry at least $1 million in liability protection, while Tier 3 customers must carry at least $2 million. That is an important issue for homeowners with larger systems. A standard homeowners policy may provide personal liability limits up to $500,000. They may not satisfy the $1 million utility requirement. The homeowner may need a higher underlying liability limit or an endorsement or personal umbrella policy, depending on what the home carrier and umbrella carrier will allow. However, an umbrella policy is not something to assume will automatically solve the problem. The carrier must confirm that the solar exposure is acceptable and that the policy meets the utility's documentation requirements. The name and property address may need to match the utility account and net metering application. This is another reason to contact the insurance agent before installing a large system. Do not install a Tier 2 system and then call the agent the day before the utility deadline saying, I need $1 million of coverage by lunch. Insurance agents enjoy helping customers. We enjoy it even more when we are given more than 14 minutes. Also, to add a little bit of color, some insurance carriers will not accept Tier 3 net metering. They will not accept it. So you do need to call before you install these solar panels. Solar panels can provide meaningful benefits. They can reduce reliance on a utility power, lower electrical bills in some situations, add modern energy technology to a home, but solar is not simply an appliance purchase. It can involve the roof. Remember the roof is on fire. Electrical systems, utility, property records, mortgage, insurance policies, title, resale process, and long-term maintenance costs. The biggest problems usually happen when homeowners treat solar as only as an electricity decision. It is also a construction decision. It is a financing decision. It is an insurance decision. The best time to question insurance is before installation. The second best time is right now. Before signing a solar contract, please contact your insurance agent. Provide the proposed system size, mounting type, ownership agreement, estimated installation cost, contractor information, and financing method. Question whether the current carrier will insure the system. Question whether the dwelling limit needs to change. Question whether the roof age creates any underwriting issues. Question whether the carrier requires permits, inspections, engineering documents, or photographs. Question whether the liability limit is sufficient. Contact the mortgage company and question how the financing agreement may affect the loan. Review the county property records and understand whether the obligation will appear as an assessment. Contact the utility and confirm the interconnection requirements. Verify the contractor's license and permit responsibilities, and read the cancellation, transfer, roof replacement, warranty, and early payoff provisions and the solar agreement. Do not rely on what the salesperson says at the kitchen table. The written contract is the relationship after the salesperson leaves. If today's Quick Bite episode helped you better understand how solar panels can affect Florida home insurance, roof coverage, financing, liens, and liability requirements, then that is exactly what I hope to do. Insurance laws, market trends, construction requirements, and financing agreements do affect homeowners in ways most people never see until they try to purchase coverage, replace a roof, sell a home, or file a claim. If you would like to review your current policy or request a quote, please visit our website at www.isom insurance group group.com. Preparation always beats regret. If you found this episode helpful, please like this video, share it with someone who can benefit from this information, and drop your comment below answering today's question. Would you install solar panels on your home after learning about the insurance, roof financing, and liability considerations, or would you decide the potential headaches are not worth it? Quick Bite episodes now drop every Saturday at 2 p.m. Eastern. This video is for educational purposes only and should not be taken as legal, tax, financial, construction, utility, or specific insurance advice. Please consult the appropriate licensed professional regarding your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching. I hope you have a wonderful weekend. I will see you next Saturday for another Quick Bite episode. Stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.